This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. We are wrapping up the week. It is Friday, July 6, 2007. Well, sadly, this week marked the dollar's best performance in about a month. While the U.S. currency made very little upside progress in most pairs, the mere fact that it did not sell off sharply is seen as a positive. The greenback is now trading at or near multi-decade lows in a majority of the major pairs. Only the yen has been weaker than the dollar due to the extremely low interest rate environment in Japan, and even that could change soon. Of course, we did see mostly upside surprises in U.S. data this week. Both the manufacturing and services ISM indexes unexpectedly rose, with services expanding at the fastest pace since last April. Today's jobs data was not huge, but we beat the target at 125,000, and we saw an upward revision to the May non-farms of about 35,000. This certainly doesn't mean the dollar should be back near 130 versus the euro overnight, but the currency can't seem to catch a break on any news. Canada also reported better than expected jobs data today, which helped push the dollar CAD back below 105 and could give the pair its lowest closing price for the week in over 30 years. The unemployment rate in June remained at 6.1% in Canada, while nearly 35,000 jobs were added, twice the expected number. Other important events this week included ECB and BOE rate decisions yesterday morning. Both banks acted in accordance with economists' expectations, with the BOE hiking by a quarter point and the ECB holding rates steady. The market reaction was very mixed, as it is so often in response to news these days. However, both underlying currencies are still perched at very high levels as we end the week. Now to the big picture. With dollar weakness clearly the theme of this market, we should look at some of the big picture catalysts that are driving the U.S. currency lower. This should help traders understand and recognize when the sell-off should continue and when we may see a correction. The number one force in Forex has undoubtedly been interest rates. While the U.S. does carry an attractive rate at 5.25%, most big firms on Wall Street were betting on 2 to 4 rate cuts by the end of the year, while other G7 central banks were expected to be hiking. Recently, Fed rate cut bets were abandoned, and the dollar responded with a very nice rally at the beginning of June. Of course, we have since seen the greenback continue lower, even pushing to new multi-decade lows in some pairs. This means that interest rates are not the only culprit. The housing market has been another big cause for concern, as many people outside the Fed believe it will ultimately drag the overall economy into turmoil. With no clear signs of residential real estate bottoming out, only time will tell how much worse this picture can get. In the meantime, it is a big negative for the greenback. Rising oil and gas prices are also a major problem for the U.S., as we depend so heavily on imported energy to meet our incredible consumption. Oil is now trading above $72 a barrel, and national gas prices are around $3 per gallon. Well, the list really could go on with ballooning deficits and rising geopolitical tension. We will end this section by simply saying that the dollar weakness has not stemmed from a single source. And while the U.S. is by no means the only nation faced with big hurdles, it still seems as though odds are stacked in favor of many other currencies, and the buck could remain under pressure for a very long time. Till next week, I hope you all have a great weekend. Take care.